Welcome to The Mortgage Brief, a podcast filled with mortgage loan information at your fingertips. This show is for the first-time homebuyer, the move-up buyer, and the current homeowner looking for residential lending tips and tricks about the home buying or refinancing process. I'm your host, Jason Ammon from Guild Mortgage. I'm a licensed residential mortgage loan officer with 20-plus years experience, and on today's show, we're talking about
home renovation loan, frequently asked questions.
So stay tuned. We'll be right back.
A home renovation loan is a type of mortgage specifically for funding home improvement projects like remodeling your kitchen, replacing old plumbing or electrical systems, installing a new roof, or upgrading your home's energy efficiency. The benefit of a home renovation loan is that you can buy or refinance a home and make improvements with just one loan and one monthly mortgage payment. By consolidating the costs to purchase or refinance with your estimated remodeling costs, you'll pay for renovations over the life of your loan instead of all at once. We're here to answer some of the most common questions about home renovation loans, from qualification requirements to available mortgage options. Whether you're planning a major remodel or just looking to spruce up your home, we hope this guide will help you make informed decisions about your financing options. So what are the benefits of a home renovation mortgage? A home improvement mortgage can make your renovation experience more affordable and accessible. In addition, because this type of loan allows you to finance the cost of home improvements into your mortgage, you can avoid taking out multiple loans or credit lines. Renovating with a home improvement loan can increase the value of your home, making it a wise investment. Not only can it improve your home's visual appeal, but it can also increase its functionality, energy efficiency, and overall comfort. A home renovation mortgage allows homeowners to customize their living space to fit their lifestyle and preferences, creating a more enjoyable and personalized living experience. Overall, a home renovation mortgage can be a great way for homeowners to invest in their homes and make them a more comfortable and valuable place to live. Discover the advantages of a renovation loan with these benefits. Only one loan. Buy or refinance a home and make improvements with just one loan and one monthly mortgage payment. Make updates to suit your style. Customize your home to fit how you live. Location, location, location. Buy a fixer-upper in a neighborhood you love or stay where you are and make it your dream home. You may benefit at tax time. Take advantage of tax-deductible interest since the remodeling costs are all in your first mortgage. Borrow more. You can borrow more money because the loan amount is based on an appraiser's estimate of your property's worth once the improvements are finished. Spread out the costs. Pay for the cost of renovations over the life of your loan instead of all right now. So what loans are available for renovations? Depending on the types of improvements that you want to make to your home, we offer 3 purchase and refinance renovation options with just one loan and one monthly mortgage payment. The first loan type is conventional renovation. If you want to make energy efficiency improvements, landscape your backyard, or install a swimming pool, our conventional loan may be the right program for you. FNMA Homestyle Renovation Loans offer a low down payment option and flexibility to choose from a wide range of renovation projects. Buy a fixer-upper and make it your own, or refinance to update a home that no longer meets your needs. Types of improvements covered: health and safety, livability, structural repairs, and luxury items. Occupancy types: owner-occupied, second homes, and investment properties. Consultant requirements: consultant not required if you plan on making energy-efficient improvements like installing smart thermostats, upgraded windows, or solar systems. You can bundle a home-style renovation loan with an FNMA Homestyle Energy Mortgage option. The next loan type is the FHA 203K. When you're in the market to buy a fixer-upper, an FHA 203K mortgage may be just the product that can help. This government loan is a good option for larger, more complex projects that cost no less than $5,000, including health and safety improvements with the flexibility of a low down payment. FHA 203K mortgages are designed exclusively for borrowers upgrading their primary residences, in other words, a house you will live in. An FHA 203K loan can help pay for fixing up a house, but there are some projects it won't cover. For example, you typically can't use it to install a swimming pool or build an outdoor kitchen. If you're unsure your project qualifies, it's best to talk to a loan officer. Types of improvements covered under the 203K: health and safety, livability and structural repairs. Occupancy types: owner-occupied, consultant requirements, HUD consultant required. The next loan type is the FHA 203K Limited, the 203K Baby Brother Loan. This limited loan is a good program if you only want to make minor repairs or cosmetic improvements like new flooring or appliance upgrades, including those recommended by an FHA home inspector. It's designed to finance projects that can be completed quickly and easily and provides financing for up to $35,000. Types of improvements covered: health and safety and livability, occupancy types, owner-occupied consultant requirements, HUD consultant not required. So, how do I qualify for a home renovation loan? While there may be some similarities in the requirements for a home renovation loan, your financial situation and plan to fix up your property makes your qualification requirements unique. However, common factors are considered when evaluating your loan application. Usually, you need to have good credit and be current with your other major expenses, and you can't have lost a property to foreclosure in the past 3 years. It might be harder to qualify if you owe the government any taxes. Like other FHA loans, you can pay as little as 3.5% down and still be approved for an FHA 203K loan. A conventional renovation loan requires a minimum down payment as low as 3%. How does an FHA 203K loan work? Applying for a renovation loan requires providing similar information that you would for most other home loans, such as information about your income, assets, and liabilities. The notable difference is that you'll submit a cost breakdown and documentation for your desired renovation and hire a contractor before loan approval. What are the home renovation loan process steps? After you've received your pre-approval letter, Guild Mortgage Home Renovation Loans and FNMA Homestyle Renovation follow this process. First, your renovation loan specialist will help ensure you've selected a licensed contractor and finalize the cost breakdown for your renovations. Once the improvements costs are determined, an appraisal is ordered of the property value. The general contract approval process is then completed, and the loan processing team reviews your file and submits your application to the underwriter. Next, the underwriter reviews your loan application and issues the credit decision. Once the credit and property have been approved, your loan will move to closing, and you'll attend your closing meeting. After your loan closes, your loan balance will be held in a construction holdback account, and you can start your home improvements. Our partner, Land Gorilla, will assign you a dedicated construction loan administrator, CLA, who will become your point of contact. The CLA communicates with you and coordinates the needs of the contractor, the inspector, the title company, and Guild Mortgage during the renovation. The CLA manages the process of obtaining the funds by making draw requests as improvements are made. Draw requests can be made online through the Land Gorilla Construction Loan Manager website or requested via email directly to the CLA. How can I use a home renovation loan? Depending on the type of home renovation loan that you choose, you can upgrade, remodel, or repair almost anything. Remodel your kitchen and bathroom, make your home more energy efficient. Upgrade electrical and plumbing, heating and air conditioning, HVAC system installation. Create an accessible entry and make improvements to livability. Eliminate health and safety hazards. Repair cracked slabs or make structural improvements. Install new flooring, windows, and doors. Lead-based paint and mold abatement. Adding or repairing roofs, gutters, and downspouts. Build second stories and room additions. Repair cracked slabs or make structural improvements. Install swimming pools, outdoor entertainment areas and landscaping, weather stripping, and insulation upgrades. Add an accessory dwelling unit, ADU, also known as a granny flat. Rebuild an entire house on an existing foundation, and many others. What are the renovation home loan requirements? Here are a few key repair guidelines to keep in mind. Generally, you can't be the one who is making the home improvements. A trained and officially licensed contractor needs to do the labor. It's always best to leave fixes to the experts, especially since the updates are designed to make the home more valuable. Your project must begin and finish within a certain time frame. Typically, work must begin within 30 days of closing, cannot stop for more than 30 consecutive calendar days, and must be completed within 6 months. Regular updates on the progress of the work are required every 30 days. What costs and fees can be financed with a home renovation loan? In addition to financing the purchase price of your new home or existing mortgage balance, if you're refinancing, a home renovation loan covers renovation or repair costs. These costs may include materials, labor, a contingency fee for items that come up during the renovation process, permits, architect or engineer fees, inspections, title update, and consultant fees if applicable. Here are some final thoughts on home renovation mortgage loans. An FHA 203 KK is a good option if you're planning on a larger or more complex project and need the flexibility of a low down payment. However, You should weigh the pros against these cons before deciding if this is the best renovation loan option for you. Requires FHA mortgage insurance. Can't be used for an investment property unless you live in one of the units full-time. May require a HUD consultant and an experienced contractor. Limits the kinds of projects that can be carried out. And finally, how do I get started? We can help you navigate the path to making home improvements to create a home your family loves. Connect with a renovation loan specialist in your area who will help you get pre-approved and better understand your renovation loan options.
Thanks for tuning in to today's show. If you would like more information about this topic or any topic related to the buying or refinancing of a 1 to 4 unit residential property, please reach out to me or my team by visiting my website, www.guildmortgage.com/Jason Ammon. That's JASONAMMANN. You can also find us on Instagram under the handle @JasonAmmonGuildMortgage and on YouTube under the same handle. Thanks for tuning in, and we'll see you next time right here on The Mortgage Brief. Guild Mortgage Company, Equal Housing Opportunity, NMLS number 3274, Jason Ammon, NMLS number 126651. I'm licensed to do business in the state of New Hampshire. The information provided today is for educational purposes only. Position, strategies, or opinions of the show do not necessarily represent the position, strategies, or opinions of Guild Mortgage Company or its affiliates. Each loan is subject to underwriter final approval. All information, loan programs, interest rates, terms, and conditions are subject to change without notice. Always consult an accountant or tax advisor for full eligibility requirements on tax deductions.